So today's session is about, I'll give a quick recap of the last session and we'll proceed with the today's agenda. Very important discussion we did in the last lecture, and the video that was made available to you people, means on the platform, within the platform. You can see that. So today, I'm going to give a quick recap what we discussed yesterday. Yesterday means the last class. So we were talking about that audit risk when we are addressing the scenarios. When we are doing that, so there will be three types of things which we can find within the scenario as audit risks. So when we are reading the scenario, we must know there will be three types of things, issues that might be audit risk. So the first is accounting issues. Accounting issues where some IFRS implication is there. Revaluation of asset. For example, depreciation. For example, research and development cost, and so on. Some accounting issues. Valuation of inventory, IS2 might be there. So you may find some sort of accounting issues that can be declared as audit risk. And then there will be some sort of, and of course, you will find 3-4 points easily in every question of the past paper, which are on the accounting issues. Then there are some generic matters. For example, generic issue, the company finance director left, was not available 2-3 months. Some control failures are there. For example, the company or something new, company introduced new accounting software, payroll package. So that may be the generic statements, but they have some sort of audit risk. And similarly for that, yes, so generic statement you will find. And then there are analytical procedures. Analytical, either you have to calculate some specific ratios, or they might be given to you over there by examiner. Both possibilities are there. Sometimes examiner asks you in the first part of the question, calculate 3 or 4, 5 or 6 ratios which you will use for audit risk assessment. And you have to calculate those ratios, profitability, liquidity, or risk ratios. So analytical procedures means, so 3 sources are there. And the fourth is detection risk. Of course, detection risk, for example, it is a new audit client. So auditor may be facing detection risk, may not be able to plan and perform work properly. Now, so how to solve it, how to discuss it? Remember, IRI is the point. You need to memorize this mnemonic. That issue is accounting issue, which is given in the scenario, or generic matter, which is given in the scenario. Okay, or it might be analytical procedures. They are the issues. And now, risk, you will explain what can be inappropriately recorded by the company because of this matter. Risk of misstatement, which account, for example, accounting issue, how accounting treatment may be wrongly recorded by the company. What is the specific issue at that specific scenario? And of course, we have talked in the last class, I'll be doing today again, the same. And then impact on financial statements. Which specific item in financial statement may be understated or overstated, or both possibilities. So you just have to specify impact. So for the analytical procedures, for example, receivable days are increasing, inventory days are increasing, from the last year. So you have, this is issue, that the inventory days increased from the 10 days to 15 days. Receivable days have increased from the 20 days to 30 days, for example. So issue. Now issue, what is the risk? The risk is that receivables are taking more time to pay. They are struggling and may not be paying, be able to pay to the company, and may result in the bad debts. And hence the company need to improve and revise its provision for doubtful debts. And the risk is that the company may not be doing that. This is the risk. How? Well explained risk is key. Well explained risk. And then you will tell impact that provision for doubtful debts may be understated and receivables may be overstated. Okay, then you will tell. So you cannot jump from issue directly to the impact. You can't. You have to develop the point. Now, so yes, there are certain cases that in the exam scenario, given accounting treatment is clearly incorrect, that the management has done clearly incorrect treatment, then what in that case? Then what should be done? How that should be addressed? Yes, you have to discuss the given accounting treatment, that why and how it is incorrect. If some IFRS wrongly applied, you have to give reference of that accounting matter, that what IFRS says and how it is incorrect. And then you will tell which specific items are misstated, understated, or overstated. So these are the possibilities. Now, the next point is, now come the turn of audit response. Audit response can be of 4 types. It can be of 4 types. Number 1, it can be direction of work. For example, what is direction of work? Perform substantive tests on the inventory, that whether it is recorded at lower of cost and NRV. This sentence which I spoke, perform substantive test to verify inventory is recorded at lower of cost and NRV. This is not a substantive test. This statement is not a substantive test. This statement is not a test of control. This is a direction of work. Another statement, listen, that perform substantive tests on year-end sales of company to verify proper cutoff has been applied on sales. Now, this is not a substantive test. This statement cannot be. It is direction of work. Simple. Another example, third example, direction of work. That they say obtain information from management of company regarding training provided to employees for use of new software, new payroll software and assess the adequacy of that training. Now see. Now what is it? Assessment of adequacy. How to, now this is assess the adequacy of that training. How to assess? It has not been told. Obtain information and assess. It is test of control. That auditor is assessing the adequacy of training. But not that, it is direction to perform test of control. That do that. Obtain information and check adequacy of training. How to test adequacy of training? That will be a different way of further procedures. It is again direction of work. Now, so audit response can be yes. One. Second, it can be substantive test. For example, we can write procedures on this. A company has revalued land and building. So possibility is overstatement. Assumption may be incorrect. Audit risk. Assumption used for the revaluation might be incorrect. Management may be biased to show increased value of assets, and hence assets may be overstated. Audit risk. What is the response? So we can write a response that assess, discuss with the management the assumptions used for evaluation to assess the validity of those assumptions. Direct substantive test on the issue. Right? It can be test of control on the matter. Or it can be some general steps taken by auditor, such as what are the general steps? Increase professional skepticism during the audit, and assign the most experienced audit team. This is general direction of work. Response. Or perform interim audit this year to avoid less work to be done at year end. And final audit. This is again general steps taken by auditor. Again, it can be the response. Whatever you are writing, remember the audit response must address one of the both or both. Address the risk being discussed. Whatever risk you explained here, that this is the risk, management may incorrectly record. Assumptions may be incorrect. Inventory may not arrive and may be recorded. Wrong cutoff may be applied. So your response must address the risk being discussed, or the possible or actual misstatement impact. Your response must address or the risk or the impact. Remember that. So next. So the next point is, if your response is not addressing any one of these, you won't get any mark. That specific things. If it is not, and one more thing, it should be, the statement should be sufficiently detailed, comprehensible. That's mandatory. Now, so I hope this point is clear to you people. I hope this point is clear to you. Any questions so far? So now we will proceed towards that past exam paper, the night electronics in the ACCA platform. Yes, I'll be sharing my screen. Here you are. This is the night electronics question for you people. The requirement is in front of you. Describe 8 audit risks and explain the auditor's response to each risk in planning the audit of night electronics company. Great. So here is the point. 8 audit risks you have to write, and scenario will have more. So examiner says you need to, when you're reading it, you should analyze the maximum risk. You need to analyze the maximum risk so that you can write answer as per that. Now, so let us start with it. And just keep your guards on. Think consciously. It's not reading for the sake of reading. When I read audit risk, what should come to my mind? In this scenario, audit risk may be accounting issue, generic statement, maybe analytical procedures. 3 things. It must be in my mind. And my mind must be doing processing in a certain way. So it is 1st July 20x5, your firm Hercules and Company has recently won an audit of new client. The first point, new generic statement, new audit client is highlighted. Okay. Night Electronics sells, products being enabling smart building system, which allow customers to efficiently control their security, lighting, and network needs. The audit manager held a preliminary meeting with the finance sector and with the following notes. Okay, since its launch, the 5 years ago, Night Electronics had experienced high level of growth, such as the founder and the CEO is considering a stock exchange listing, another generic point. Second risk, what I say, they are considering stock exchange listing, and it is they're biased. They might be manipulating the things. High risk, overall risk. Now, so Night Electronics has both corporate and domestic customers. On 1st October 20x4, Night Electronics Company began to offer the customer the option to purchase a 3-year servicing agreement. This provides annual service for product purchase. Customer purchase pay for the servicing agreement in full at the start of the agreement. Now you see here, this is typical accounting issue, revenue recognition, IFRS 15. 3-year servicing agreement, and they are receiving the whole amount in advance. Receiving whole amount advance means, yes, the point is we should be mindful, thinking what is the risk. Okay, being a student of audit and insurance, I must be, when I'm reading this point, I must be visualize risk and impact. If I cannot visualize the risk and impact of this issue, I won't get marks. That's for sure. You must be able to visualize. Your mind should be working when I'm reading it. Next. The component parts are purchased from a number of suppliers. Prices of components have been steadily increasing over the past 2 years, leading to a reduction in the gross profit margin. What is it? Anything comes to your mind? Prices are decreasing. Reduction in gross profit margin. Yes, prices of components are increasing. Reduction of gross profit margin. So cost is increasing. Price is shrinking. IAS2. Cost may be higher, price may be the less. So selling price may be the less. Now, the next is in 20x5, in June 20x5, Knight Electronics Company decided to revalue its premises. Which has been previously been accounted for using the historical cost model. Properties with a carrying amount, it revalued. Okay? And the properties with a carrying amount under the cost model of $3.8 million were revalued to, oh my God, huge increase. Yes. So the point is revaluation. Maybe on the invalid assumptions. Revaluation may not be done for the assets of the same category. IAS 16, which we studied in financial accounting F3. Yes. Now, the finance center also carried out an extensive review of non-current asset lives and decided to extend the useful lives of plant and equipment from 5 years to 8 years. Another issue, they estimate. This is estimation. And they have revised it. They've revised the useful lives. Risk of misstatement is there. Now, how many points? 1, 2, 3, 4, 5, 6. Done. Okay. In June, in May 20x5, defective production of the Knight Electronics resulted in a small fire at its premises. The company has commenced legal action supplied for the equipment. Knight Electronics lawyer has advised a legal action, and as a result, they have included a receivable for damages likely to be received from supplier. Now, this is clear incorrect accounting treatment. I told you that there might be clearly incorrect. Right? They've commenced action. Lawyer is saying is the likely to be successful, and they've recorded immediately. Possibility is there. Now, so there is high risk it might be incorrect. During the year, the company's credit control was ill and was absent from the work for 4 months due to shortage of staff. No replacement credit control was appointed. The receivable period has increased from 45 days to 75 days. No replacement controller. 2 points are there. Sorry, the 2 points. Credit controller was absent, and receivable collection period has this is analytical procedure. Receivable days have increased. Next, as instance of payroll fraud was discovered during the year. A payroll has set up a number of fictitious employees and wages and then paid into the clerk's own bank account. Now, this control have now been implemented, prevent reoccurring, that no longer work. However, further items may be misstated. Now, how many points? 1. William Knight would like the audit to be completed by 31st October. Oh my God. 30th September is the year end. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. 10 audit risks we identified. Now, I will filter out 2, for example, which I don't want to write. I think I am not able to write well about these 2 points. So I need 8. So I will simply the point copy and paste over here one by one. Okay, and edit those as per that. Sorry. Why it is not selecting? Yes, like this. So, and I will edit it and explain it. And similarly, I will write response for that. So I'm not writing the response because although we decided 1 hour session, but I'm extending it to discuss this answer and complete it. I hope you will stay with me. Now, so come here. So I will be connecting my iPad again. This is answer written by me, not by your examiner. Examiner answer is also there. You may have that. So I will be doing proper analysis of the answer. This is answered by me. Okay. So it is a new audit client. This is issue from the scenario. Okay. So now the audit firm may not be well familiar with the accounting policies, transactions, and balances of the company, financial affairs of the company. You see, may not. How risk is arising and impact on audit now. It is impact on audit. So it may not be able to plan and perform audit work due to increased detection risk. What the blunders is done by the student. Or since it is a new audit client, auditor may not be familiar with the company, and hence audit risk is high due to increased detection risk. So you didn't explain in detail, in depth. How are you expecting mark? You won't be granted marks. Remember, now, so this is overall risk. This is the risk you see here. This is the risk. Now, response should address it. They may not be familiar. This is risk and this is impact. I told you response should address risk or impact or both. So audit firm should assign suitable experienced team, should obtain detailed understanding and its risk of misstatement, and then plan and perform audit accordingly. Word accordingly is missed. So you see here, this is addressing the both here. Okay, addressing more to the risk and its impact is here. That is also correct. That's also correct. But then you have to explain audit risk, the same audit risk. Very good question. A student has asked a question that can we write the audit response here that perform detailed substantive testing on the opening balances of the company. If you have explained this risk and writing the response different, opening balance, it will be blunder. You won't get any mark. I'm happy you discuss this point. Means your point is valid principally. But what you have discussed risk, that response is not addressing that. Got it. Response must address that, the issue. If you are discussing opening balance issue here, then you have to write response on opening balances. Then you cannot write this response. Remember that. Now, as per the CEO, the company is considering a stock exchange listing next year. As per the CEO, the company is considering a stock exchange listing. This is the issue from the scenario. Again, generic statement. So, professional skepticism That is the tool of the auditor that requires immediately alert. The management may be manipulating the financial results to show improved results in the stock market, to increase share price. This is risk. And this is impact. Now, so audit response should address it. So since overall risk has increased, that the company is going to stock exchange listing, huge risk, overall company level risk. So increase suitable staff, but writing this won't suffice here. It is important. What they should do, they should increase skepticism while auditing first statement, especially those areas due to significant judgment involved. Significant judgment or complex items. Because, yes, those items have more chance of miss. So addressing this risk of misstatement, this risk can impact both. Now, I hope the point is clear. You see, we should not write it. Okay, here. Why we should write it here? It is generic point. Why we are saying preliminary expenses? Why we are being specific? When scenario has not been specific about this issue, they say only stock exchange listing. How can you say preliminary expenses may be missed? Why? We cannot say that. So your question, I think I have responded. Since it is generic thing, we cannot say specific. Yes, normally what is misstated? Items involve judgment, complex criteria. So that we should check in detail. I hope the point is valid. Now, the next point is, yes. So remember, those possibilities, we have not to take assumptions from our side if information is not available in the scenario. We cannot do that. Now, so the next point we identified, they offer its customer the option to purchase a 3-year. This is the issue from the scenario. 3-year servicing agreement issue from the scenario. Yes, this is the issue. So now, as per IFRS 15, revenue should be recognized as a performance obligation is satisfied. Now, linking it to the scenario, why we are, if you don't remember the number, no worries, don't write it. It has no marks. The revenue should be recognized as performance obligation satisfied by performance of service. Revenue from should be recognized at and when the revenue at the time of receipt should be recognized as deferred income, applying to scenario. The risk is that, so we have developed the point. The risk is that they might be recording the amount received in advance as revenue at the time of receipt incorrectly, the risk, and which may be overstated, revenue may be over, liability understated. Now you see here, this is direction of work. This is direction, a type of substantive. Inquire from finance director how revenue for the services is recognized by the company. How? Inquire. This is procedure, you can say, okay, inquiry. But the next, and verify for the sample of contract as it is as per IFRS 15 or not. This is the direction. As per IFRS 15 or not. Okay. This is, but if a student writes, if a student writes answer like this, a champion, verify for a sample of contracts, revenue is recorded as per IFRS 15 or not. Now, you won't get marks here. How to verify? A bit more detailed thing should be there. Right? Now, next. Price of components are increasing steadily, leading to reduction in gross profit margin, but the closing inventory is still held at cost. Price of the component, cost, we can say cost, purchase price, the word purchase price. Yeah, what is the risk? The risk is NRV of the component may be less than the cost. And inventory may be overstated in financial statements because of that. Because it is still held at cost. You know, the linkage. It is still held at cost. Now, you see direction of work. Perform substantive test to verify whether the cost of inventory is being below the sale price, to assess NRV is below or above cost, and it is recorded lower amount by the company. It is recorded at the lower amount. So perform substantive test to do all that. How detailed it is done, discussed. That it is clear what to do. Now, some champions, they write response, perform substantive to verify inventory is correctly recorded as per IS2, enough. So you won't get marks by that. Next, the value of property issue has increased. Now, the risk is that this huge increase in value may be inappropriate assumptions due to show increased value of assets for the listing. You see, I have linked 2 points. May be inappropriate assumption. And hence, property, plant, equipment may be overstated. So what is the risk here? Assumption is the inappropriate. And this is the impact. You can write response on the both. This response is addressing risk. Yes, discuss with the director of company the basis of revaluation. Basis of revaluation or assumptions of revaluation. Right? Assumptions of revaluation of the assets by the company and assess the validity of this is substantive test. Another student thinks that I need to write property, plant, equipment may be overstated. Okay. Obtain the market value of the asset information of the assets revalued by a company from real estate agents to assess the amount, revalued amount of the assets is correct. So this is also correct. Substantive test. Addressing the same risk. It is correct. Now, the next point is directors increased useful lives of plant and equipment from 5 years to 8 years. Okay, before going for that, Another student explains another risk from this same issue. Another risk can be explained. The risk explained by the student is revalue, that all assets of same class should be revalued as per IAS 16. The risk is that they may not have revalued all the assets of the same category. And hence, property, plant, equipment may be understated. The value of other assets should also increase in line with it. Then response will be different to address this risk. That is also a valid answer. That is also a valid answer. Now, the next point is directors increase the useful life of plant and equipment from 5 years to issue. Remember, issue. Increase in life decreases the depreciation charge and increase profits. Yes, it happens. Issue is being explained. How risk is arising? How risk is arising? The risk is that the individual has been done to boost profits. Risk. And hence, property, plant, equipment may be overstated and depreciation understated. So issue, how the risk is arising and impact. IRI, remember, review the details of recently sold property, plant, and equipment, whether they have been sold on the profit or loss. Recently sold, profit or loss. If they have been sold on profit or loss, it means their life was inappropriate. Huge profit on the sale of asset, huge loss on the sale of asset. It means they were not depreciated properly. Okay, on the right useful life. So in the light of that, assess the changes in the life are appropriate in their life. This is substantive test clearly to verify. I said that the risk is that increase may have done. This is the risk. We are verifying it. Yes. No. For not this one. That's because we have already written that above for the above part. So it will be quite repetition. Examiner will be bold. Okay, they say this person have only 1 point. One way to write the answer. Repeating. Okay, when you ask question, just do one thing, please. Send question to all. Means when I'm answering the question, other students might be thinking, what Mr. Hamzah is talking about. They don't have any clue. So please don't hesitate in asking the question. No one will judge you here. Everyone is learning. Okay? So there should not be any insecurity in learning at all. Right. Next. So the company has recognized issue a receivable in respect of claim for damages against its supplier. They have filed a claim against supplier and they recognized a receivable. The lawyer said that it will be successful. Issue. Now, this is pure accounting issue and there is high risk. It may be incorrectly recorded. As per IAS 37, a contingent asset can be recognized only when you don't remember, don't write. When cash inflows are virtually certain. And for to be virtually certain is now applying to scenario. If the supplier, it is confirmed by a supplier or their lawyer that yes, we will pay. If it is assessment of our lawyer, the company's lawyer, yes, it is going to be received. Then it is not virtually certain. Virtually certain becomes when the other party accepts the responsibility or the court decision is made in your favor. The other party or their lawyer. So now this is risk being explained here. How the risk is arising? The risk is that they don't have any formal communication on the claim from the supplier, and they have recorded it as assets, and hence this is impact. Now the point is, if a student writes directly, claim may be successful, and they say there is a risk that they have recorded incorrectly, and they don't explain it, do you think they will get masked? No, they will not, because you are not specific, you are not discussing in detail. So yes, response. So discuss with the finance director of company whether it is virtual certain that claim will be successful and how it is. Very important. And here assess the validity of their response. Another student writes, ask director of company, another response that may also be valid, whether any formal communication regarding payment on claim has been received from supplier or their lawyer or not. So ask them. That is, it is again substantive test. It is also substantive test. Now, so 8th point, last, I have discussed 8 only. I wish I would have discussed the next 2 as well. But for an exam, you have to read 8 only. Receivable days have increased from 45 days to 75 days. And due to that, increased allowance for receivable need to be recorded. Increased. This is explanation how risk is arising. How risk is arising. The company may not have recorded sufficient allowance for receivable and may be overstated an allowance for receivable, understated. There may be a number of substantive tests for us. You can write any, which is fit. I have written, review age receivable ledger and inquire from the management whether allowance for is reasonable or not. So validity of response is repeated quite. I will modify it. Okay, review aged receivable ledger. Receivable ledger and assess the adequacy of provision for doubtful debts or allowance for doubtful debts recorded by the company. That is also correct. And assess, review that ledger, and in the light of that, you are assessing. That's better. Another line. Now, so students, that's the end of today's session.